Hi guys, Jacob Field here from Ripehouse Advisory, back with the second installment of our deep dive on AI, AGI, and how that might relate to us as property investors going forwards in Australia, here 225 through the next few years. And I really wanted to probably refocus things back onto opportunity. We've peeled back a few layers of the onion. We've talked about how jobs can shift, how local governments might respond, and why potentially 80% of our current workforce, the roles, might be gone or changed, or evolved might be another way of looking at it. I really wanted to unpack this. It's been many of you in the last 24 hours, been really concerned about these changes and feeling like, hang on, I need to consolidate or don't take risk. And wait and see, And that's something that's a very natural response. I can understand that wait and see mentality, and it's perfectly fine and acceptable. It's not generally the way I operate. I prefer to be someone who looks at disruption as a tremendous opportunity and really tries to understand how it fits together so we can play chess and not checkers. We can position ourselves to make the most of every opportunity. Because if we wait, this year it might be AI, next year it might be whatever it may be. Last year it was Ukraine-Russia war. The year before it might have been the previous election, etc. We'll always find an excuse. So we've got to understand things to build that confidence to take action. So look, let's just understand that money doesn't vanish. Okay, it's not like AI or disruptions to jobs is going to cause money as we know it to vanish. It just gets redistributed. And this is a really important concept because this disruption will cause redistribution, right? It happens whether we like it or not. We want to be positioning ourselves to benefit from the redistribution and not to suffer. And it might be a separation or a have and have-nots conversation, or it may not. We don't know yet. But we want to take strategic moves to put ourselves in a place to benefit from a redistribution. That's a really important point that we need to understand as we're going through this conversation. So I wanted to keep it quite short, right? We don't need to go into a huge amount of detail here, but I did want to have an outcome from this conversation today around how we can make the most of the upcoming AI revolution as property investors, as property buyers in Australia. This is happening whether we like it or not, right? We're talking about AI functioning essentially at the same level, physically and mentally, as the average human, right? The next leap is towards super intelligence, right? AI performing not just physically but mentally at a level that is far greater than humans. And the disruption that potentially may occur or cause on the society is going to be dramatic. There's no two ways about it, right? Big disruptions breed bigger opportunities. Entire industries flip overnight. New niches open up. Even if 80% of traditional roles disappear, you can be sure we'll see policies like universal basic income, profit sharing through AI-driven corporations, government programs keeping money flowing, right? People still need somewhere to live, to gather, to build new ideas. That somewhere is property, okay? So we need to understand that even though despite these upheavals, real estate has historically shown strong bounce backs and even really strong upwards trends. Look at COVID. This is a very similar to COVID event. The whole world shut down. There was massive uplift and property prospered through the process, dramatically prospered. If you caught in my last video, go back and check it out if you'd like to. It's an interesting deep dive. And I did highlight the huge risk that over-government and bloated bureaucracy has to play in the AI revolution. We looked at my own backyard down here in Hobart City Council, and we saw how, despite minimal population growth, costs, fees, and rates have soared over the last 20 years. And if that's happening now, imagine what could happen if 80% of taxpayers can't pay the same level of rates because their old jobs no longer exist. Here's the key point. Not all local councils will respond the same way. Some will embrace automation, digitise services, keep rates lean. Others might bloat further, hijacking your expenses as a landlord and homeowner. The gap between forward-thinking councils and stagnant ones might become massive. That means if you're bullish on real estate, and I'm just bullish on opportunities generally, okay? If we find opportunity, we move, and if we're going to move, we may as well move strongly. So if you understand the power that real estate brings into this environment, stability, scarcity, something that is going to be needed whether there is AI or not, right? It's not like the AI are going to kick us out of our homes, right? We need to live somewhere, and if anything, the standard of our living will dramatically improve. And just think about that for a moment. You don't just buy anywhere. You buy where the local government is nimble. They're prepared for AI and where population demand remains strong. So like anything we do at Ripehouse Advisory as an example, myself as an investor, we look out across the country, we crunch the data. I'm a data scientist, a software engineer by trade. We are looking at the data 24/7 anyway. This just means that our algorithm slightly changes. More emphasis brings ourselves to assess the local government and their ability to stay nimble. Because if they're doing it now, you would assume that they will continue to do it through a point of disruption. So this is how we stay ahead of the curve at Ripehouse Advisory. So let's look into the future, I guess, a little bit. Let's be bold. Let's be somewhat visionary. But we're doing this not to create risk, but to minimize it. AI is about to transform things, and it is already doing it. But I feel it's a period where, while some jobs like law, accounting, even some creative fields, software engineering, unfortunately, there'll be entirely new roles that will spring up in AI oversight, robotics management, emergent fields that we can't even predict. Right, so even though we might be losing or 80% of jobs being severely impacted, we are gaining a huge amount. AI means productivity. It's full stop. AI means cheaper productivity. And AI means productivity not linked to humans. And that's really important. It's productivity for us and not by us. So even if we're seeing something like universal basic incomes or large-scale corporate dividends, the money doesn't vanish. It just gets redistributed. People will still pay rent. They still need homes. And they're possibly, en masse upgrading their living conditions for remote work, AI-based incomes. This potentially may make location extremely important. It may put more emphasis on property than it is now, right? If property is something we can control, it may mean that as humans, we move back towards the house and the home. As potentially my generation or my parents' generation, the home was their castle, right? We're not going to put up with living in units, living on top of a train station, if we've got an AI army working for us and our standard of living increases. So it's putting emphasis back towards scarcity-driven assets on good land allotments in up-and-coming areas with great utilities, social benefits, etc. It's the same thing we do at Ripehouse in analysing an area. So it comes back to money doesn't vanish, but we need to be focusing on the right assets. This is the window. By purchasing property now, while you still have a traditional income you can leverage, you can set yourself up for a future where real estate becomes an even more prized asset. And lock this in the current lending landscape. And this, I guess, before everyone else wakes up to the opportunity, which will happen, right? We want to be the first to act with confidence and clarity because we've done our homework. We understand how it fits together. We don't want to be sitting in the hairdressers, probably with a robot cutting our hair in 3 years' time and having our hairdresser say, oh, I'm about to get a really big loan and buy a property now because it's just going up so quickly. We want to be the ones generating profits and they are locking it in for us, right? The AI hairdresser in a few years' time, trying to catch that wave that's been 3 years in the making, okay? So humans, we will still require physical space. keeping properties in high demand areas and buying them to lock in that future demand or lock in our position for that future demand is incredibly important. So look, this might sound extreme, but it is a massive chance for property owners to position ourselves and to allow this disruption to create us growth. There is an AI wave, it's rolling in whether we like it or not. And we can choose whether to position ourselves and surf that wave now or wait for it to wipe us out. We've talked about in the last video humanoid robots, right, from Figure.ai, or Tesla robots jumping into factories, replacing human labor. This is not sci-fi, this is real, it's happening now. BMW have already bought 100,000 robots from Figure.ai, this already happened. It'll speed up exponentially. People ask me, is the housing market going to crash if everyone's out of work? In my view, the bigger question is, who owns the assets that remain essential in this new economy? If you want to be in the group of asset owners, then you need to understand how this fits together. You need to act now with clarity. You need to use your current incomes, right? And you need to safely use that to leverage into property. You need to be very strategic, not just using old formulas or old metrics around how to analyze areas. You need to mix that with a subset of common sense, of, human touch to understand how markets might respond through dramatic periods of upheaval. And we've just seen it. What were the local government councils or even states that responded well to COVID? Because they're generally going to be the ones that are nimble and able to respond in our benefit and not become these massively bloated layers of government. Some governments will adapt, some won't. We want to be in the ones that prepare for the AI era. Right? Secure financial futures. Even if you end up using a portion of your rental income to offset rising council rates, this is a worst case scenario. The underlying property can still appreciate significantly if it is in a tight supply, robust demand market. Right, so this is really, we need to understand that AI is here, it's shaking up the workforce, but real estate stands to remain a pillar of wealth and stability. Over the next coming weeks, I'm going to be talking about which LGAs, which suburbs, so let's focus our attention on, and teaching us a framework or getting us to think about how technology can be leveraged today to start positioning ourselves to make profitable property decisions in the future. So call us at Ripehouse Advisory if you'd like to have a conversation about it. If not, that's fine. It's all good. I'd love it if you continue to watch our videos and subscribe to the channel so you are first to know of any updates. And click the like button, get into the comment section. Let's have a conversation about this. If you did want to book in a 15-minute discovery call with us, we will discuss your current position, your goals, and how we can strategically invest now to navigate the AI revolution. And it comes out stronger on the other side for both of us. So thanks for tuning in. Let me know any questions, any conversations. Let's do this together, guys.